So Samsung shares were down on Monday after news emerged that a South Korean special prosecutor will seek an arrest warrant for Samsung Group chief Jae Lee on charges related to an influence peddling scandal involving the president Park Geun-hye. Shares for units of South Korea's largest conglomerate were down on Monday. The heavily weighted Samsung Electronics was down 2.14%, as well as Samsung Heavy Industries, Samsung Engineering, and Samsung C&T. The benchmark South Korea's Kospi traded down 0.61% or 12.6 points. Meantime, Asian markets were tested on Monday as the British pound fell more than 1% on fears of a hard Brexit from the European Union. The Nikkei 25 average was off 1% as the yen firmed up with major export stocks under pressure. Chinese markets also came under heavy selling. The Shanghai Composite was down 0.32%, while Hong Kong's Hang Seng Index about 1% down in mid-afternoon. Okay, so we're about an hour to the opening bell on Wall Street, showing a likely lower opening. Look at the stocks futures as we get the three major indices for you all the time. See all of them in the red. The Dow Industrial Futures lower than 19,795. That's 0.20%. Tracking that was the S&P 500 and, of course, the NASDAQ futures about 0.16 also in the red, tracking the rest of the global markets this Monday with anxieties mounting over Donald Trump, Brexit, possible hard landing, and the World Economic Forum starting tomorrow in Davos, Switzerland. Meantime, concern is mounting over the possible economic impact of arresting the head of South Korea's biggest company, Jae Lee. That's Samsung. South Korean prosecutors request the arrest of the Samsung head for charges of bribery linked to the corruption scandal engulfing the president. This is what the reports on that looks like.
South Korea's massive corruption scandal taking yet another major turn on Monday. The special prosecution has requested an arrest warrant for Lee on charges of bribery, embezzlement, and perjury in his testimony and appraisal in the National Assembly.
The special prosecution has requested an arrest warrant for Lee on charges of bribery, embezzlement, and perjury in his testimony and appraisal in the National Assembly.
The billionaire business mogul is at the center of a bribery probe linked to the scandal that's already seen disgraced President Park Geun-hye impeached by Parliament. Lee was questioned for 22 hours straight last week. He's suspected of paying money to organizations backed by a close friend of President Park to win approval for an $8 billion merger of two Samsung Group affiliates. That friend, Choi Soon-sil, was in court herself on Monday, denying any wrongdoing. And in another big development, the head of the National Pension Service was indicted on charges of abuse of power and giving false testimony. He's the one who helped approve the merger last year. In December, Lee denied that Samsung lobbied or paid money to get the deal pushed through. Now the prosecutors think that may also be false testimony. Concern is mounting over the possible economic impact of arresting the head of South Korea's biggest company. But investigators say getting to the bottom of the case and seeking justice are far more important than matters of money.
One of the biggest stories for the week is the inauguration of the U.S. President-elect Donald Trump. Meantime, he's been speaking to the media. He's had one of the interviews done in the U.S. Now he spoke to the Times of London about Brexit, the refugee crisis, and the U.S. Relations with Europe. Some of the issues that U.S. Prime Minister Theresa May is also expected to speak on Tuesday. Let's listen to this soundbite from Donald Trump, President-elect.
I thought the UK was so smart in getting out. And you were there and you guys wrote it and put it on the front page.
Yes.
Trump said that Brexit was going to happen.
Yes.
Right? And it happened.
Yes.
And that was what it was going to lose easily. You know, everybody thought I was crazy. Obama said they'll go to the back of the line, meaning if it does happen. And then he had to retract. That was a bad statement. Countries want their own identity. And the UK wanted its own identity. But I do believe this, if they hadn't been forced to take in all of the refugees, so many, with all the problems that it entails, I think that you wouldn't have a Brexit.
U.S. President-elect Donald Trump speaking there with the team of editors from the Times of London about Brexit and other things in between. Let's come back to the African continent, where foreign investors are looking to snap up between $10 to $11 billion of Egypt's local treasury bills and bonds in the coming period. That's according to the finance minister, Amar El-Ghahi. The Egyptian government issued its forecast ahead of plans to return to the international bond market to raise nearly $2.5 billion of Eurobond. Marketing of the Eurobond starts on Tuesday in Abu Dhabi, according to the state media. Egypt's trying to test waters with investors before issuing those Eurobond papers. On the treasuries and bonds issuance, Egypt has been paying some 20% in borrowing costs since the central bank raised interest rates early in November last year and floated the country's currency, the Egyptian pound. Egypt looks to raise some $6 billion in local debts in the current financial year. Okay, so where we are as far as Mozambique is concerned, the news is now out. Mozambique would not be able to pay holders of its 2023 bond on January the 18th, that to be on Wednesday this week, because of the country's deteriorating economic and fiscal situation. And that's according to the finance minister who spoke on Monday. The Southern African nation, whose total foreign obligations are roughly equivalent of its GDP, says financial difficulties made its ability to repay debt this year extremely limited. Mozambique's economy continues to face challenges of weaker commodity prices, lower demand amongst trading partners, and rising U.S. interest rates, according to the recently released economic analysis for the country. The report predicts Mozambique's growth will continue to slow in 2017. Of course, you know where to find the largest diamonds on the African continent. That's Botswana. But the country's consumer inflation increased to 3% year-on-year last month from 2.9% in November of 2016. That's according to data from the Statistics Office on Monday. Prices rose 0.1% month-on-month last December. Botswana's economy has been diversifying largely because of foreign investment attracted by low taxes, political stability, and an educated workforce. Africa's largest diamond producer continues to set an example in the management of large endowments of its natural resources. That's about all for today. We thank you very much for watching. I am Bosin Amafaye in Lagos. Bye for now.